Good morning, you're watching Morning at NTV. The question or the discussion is around insurance in Uganda. 0.81% is the insurance penetration here in Uganda, with the losses, the capacity of some of these insurance companies to actually cover all risks. And let's talk about the products themselves. Are there those that are targeted towards low-income earners? We're trying to be a middle-income country. All the products for the middle income, there's a premium product for someone who earns even more. Life insurance, I know there are 29 insurance companies, but there's some 20 are non-life and 9 are life. And you're already wondering, what's the difference? What's the use of some of these? And some of you are saying, can't I just go through life without insurance? So in studios, I have the Assistant Director for Market and Research Development at the Insurance Regulatory Authority of Uganda, and that is Protazio Sande. Good morning.
Good morning, Flavia.
Perhaps we start from insurance, assurance. Let's just tell the difference between the two.
Okay. Insurance is basically for non-life, technically speaking, where the payout is on probability. Like, for instance, for a motor vehicle, we call that one motor insurance. And the idea is that if you're insuring against accident, if you're insuring against theft, the payout will only be in the event that the car has gotten an accident, the car has been stolen, or parts have been stolen.
Yeah.
That's insurance. But if none of those happens, then you don't claim anything.
I make the loss.
It's not a loss, because actually they will have given you that peace of mind.
Okay.
There is nothing as good as knowing that you have a car. But with these rampant accidents, you have a car today, tomorrow you're on foot. You have
even
crashed
theft, by the way.
Exactly, it has been stolen.
Yes.
So with that insurance, you have peace of mind. So you have actually not made a loss. You have paid for the peace.
Okay, so in insurance, you're selling peace of
mind. Exactly.
You're promising me peace of mind.
Exactly.
Which we're saying.
And we guarantee that.
Okay.
That's insurance. Then assurance basically applies for life policies. And with life policies, the payment is guaranteed. And that's why we use the word assurance. How is it guaranteed? It's guaranteed in the sense that payout is made regardless of whether the insured dies before the policy matures or the insured lives up to the policy maturity. So payout is guaranteed either on death or on maturity. Okay. Whichever comes first.
All right. So you have first of all, you have 29 insurance companies. And when I was talking to you, I said, isn't that too few? And you say that's actually too many for our market. What does that mean?
Yes, indeed. I said too many because when we look at the trend, there is actually a trend towards consolidation. In the recent times, I think you must have read in papers some companies coming together and forming one strong company. And as a regulator, that's a very good thing. It's very good to regulate companies which are very strong. Okay. So we encourage them. If they feel probably they are lacking in some areas, their capital challenges and whatever, then amalgamation or merging becomes very critical. Yes. So you had said 29 are few. For Ugandan market, and looking at our GDP, for instance, because GDP is a core factor in insurance, probably the number could be smaller than that. So if companies approached us proposing a merger or an amalgamation, to us that would be a good thing. But also independence everywhere is very important. So there are not too many, and probably I would say they are not too few. But if they can consolidate, the issue is consolidation.
It would be an advantage.
That would be an advantage.
Okay, so you have 20 non-life and 9 life. That is already telling me that life insurance or life assurance, as we discussed it, is not that popular with us. I know that when I was getting out of university, me and my former classmates were sold the whole idea of, I was one of those who didn't pay attention to it, didn't take out, but one of my friends did, and said she had actually forgotten that she had put a standing order for some money to be taken off. And then they told her, oh, but if you feel you want your money back, we can give it to you. So just make us understand, first of all, what life assurance is. Is it, you were telling me you can be paid to you 5 years if you took out for 5 years. Yeah. You're saying that if I live and stay alive for these 5 years, you pay me my money.
You are paid what we call the sum assured, plus all the bonuses that we have
came with
over
it.
Time. Yeah.
And if, God forbid, I die within or before the 5 years, my next of kin, whether it's my children or my father, my mother, whoever it is,
paid the sum assured.
Is paid the sum assured, plus all the bonuses, I'm assuming.
Yes, sure.
Yes.
Up to that time.
Up to the time you die. So who ideally would take this out, and what's the value of it? Because if I'm saving, let me tell you, I know how saving in this country is. You have like a little group with your friends. You have the circle at work. you have the community circle. As in, there's so many points at which I am putting my money, Protazio, aside, that I'm trying to understand why this is also another reason.
Yeah, but you see, the advantage with the life assurance is that none of what you have mentioned takes care of the event that you die before. Because I would ask you, why are you saving all this money? You have a certain dream, you have a certain
goal, yes.
And that goal is can only be realized if you manage to live up to the time you have accumulated all this money. I will give you an example. I have always had a dream that my children go to the best universities in this world. Now, that will only be possible for as long as I'm working, and that means that I'm alive. But in the event that I'm not there, even with our extended, we have these extended family networks in Africa. I mean, my brothers may not support my children to realize the dream which I have initially conceived. So I say, death is a must for all of us. What is not clear is when it will occur.
When it will happen, yes, yes.
Now that I don't know whether it will occur late or early, I put aside money. For as long as I'm able, I get my salary, I make a standing order, so much money goes to an insurer. This insurer gives me a guarantee that if you died tomorrow, then so much money will be paid.
Okay, so
but that's different with a circle, because with a circle they will give you what you have already saved.
Right now.
Exactly, the amount of money that you have saved. Yes. But here's a situation where I have saved only 6 months, 6 installments, and my policy is 10 years. The insurer will pay what they are assured to pay at the policy inception. So it's very important, and it's actually a trend. When we look at development, it is positively correlated with the development. In most developed countries, life assurance policies are almost a must for everybody.
It's a big deal.
Sure.
So why is it not a big deal here? Why don't we understand the value of giving a good future to our children, our parents, whoever we're leaving behind?
Yeah, sure. It's, as I said, there is a correlation between the attitude towards and the uptake of life assurance with development. And over time, in as much as we have 9 companies, these companies are actually very strong companies. Okay. So they are not few. Let's not look at the number and we say maybe they are few and they cannot manage. They are capable of offering the products. But you buy life assurance when you have money. Now, one of the challenges we have in Uganda is unemployment. You know that.
So is it higher income earners tend to understand this more? Exactly.
Actually, when you look at who is buying life assurance policies, there is a skewness towards high income earners. Because my mother in the village, my brother who is probably a peasant down there, is thinking about today and tomorrow.
And that's the point. That's what I was trying to tell you. We're all thinking of the same thing, just differently.
Their thinking is short term, while Flavia and your colleagues, you're actually looking at the long term. Yes. So it is the perception of life. Are you looking at life today and tomorrow? Or you're thinking of life in the long term? If I'm finding it difficult to buy food to eat, then you cannot tell me to put aside money for 5 years when I'm not even sure that I will reach 5 years.
Let me tell you about, let me ask you actually about inclusion. We're fighting for inclusion in a lot of sectors, whether it's banking, whether it's, our trade industry, everyone wants to be included. Yes. And I'm trying to look at what products give, when they're, you're putting down products for insurance, are you thinking of the low income earner, the average? I know we've talked about the premium, and I'm guessing actually, to be honest, there might be less for the premium earners than, high income earners than it is for low income earners. Yes. But for example, talk to me about the low income earners. What products are more popular with those people?
Okay, thank you. I would low income earners. I would look at, for instance, a primary school teacher.
We're talking to people who are saying that insurance is pricey. There's no point of insurance. Yes.
Yeah, that's a major perception. With insurance, you buy what you can afford. Yes. Just like a dress, you can go to the most expensive boutique and you buy a dress. Somebody else goes to St. Warikudembe, buys a dress. You both have a dress. Yes. Now, what insurers have done, they have structured their policies in such a way that somebody with high income can buy. Somebody with low income can also buy. If I give an example of a primary school teacher, yes, generally I think I consider them low income earners. They can put aside 50,000 shillings
a month,
buy a life policy. Yes. If I'm a primary school teacher, I'm really concerned that my children have to go to university. The only way that they can go to university is if I save this 50,000 for say 10 years. By the time they reach university, I have accumulated so much money. And they can smoothly go through their university education. Now, there are people also like Flavia.
I was about to ask you, is that the lowest I can put down?
50,000 apparently
yes.
Could generally be conceived to be the lowest. If you're looking at a market, because there are also costs of administration.
Okay.
If you're looking at a and actually what insurers have done, some of them have structured them even into daily submissions. If you're a border cyclist,
yes,
you can pay your money daily on a mobile and it goes to your account. So they are coming up with innovations to ensure that even these people who have low income, just like SACCOs did and these microfinance institutions, but the border cyclists have accounts in these SACCOs and whatever. So insurers are also tapping into that same market. As a regulator, what we are doing, we are coming up with an enabling regulatory framework.
Okay.
It is called microinsurance regulation. And the idea is that we want to introduce flexibility, especially in as far as who can sell this product is concerned. In as far as the bundling of products, we're actually introducing what we call bundling. Bundling is where you have a life product and a non-life product put together into one product. These conventional insurers that we talked about cannot bundle. You're either selling life or non-life.
Yes. For
microinsurance, we are saying let's bundle. If you have your cow, you can put some money for health. You can put also a life component. So that it is one product sold by one company, which is a micro insurer. For that to happen, we have to have a regulation which provides the exception from the already existing regulation, which says if you are non-life, you must sell life products.
Yes.
I mean non-life products. If you are a life company, you must sell on a life products. And probably the other product which is appealing the low-income earners. Majority of our low-income earners are farmers.
Yes.
Insurers have come up with agricultural insurance products. In Uganda today, we have a consortium of insurance companies that have come together and formed some kind of a pool, a group, to offer agricultural insurance policies as a group. And the idea of this group was actually supported by the government of Uganda, that made a provision in the budget since 2016-17 of 5 billion Uganda shillings. Now, this 5 billion Uganda shillings is supposed to subsidize
what
the
I
premiums.
pay as a farmer.
Exactly.
Okay.
And if you're a small farmer, and there are definitions for a small farmer, a person who is farming on an acreage of, say, 5 acres, is really a small farmer. You get 50% premium subsidy. So if what you have to pay is 10,000, you only pay 5,000.
Let me ask you, is this for me who's a farmer for consumption, a farmer for, tapping into the economy? Who are you looking at?
We are looking at all farmers.
Okay.
What actually we are defining a small scale or large scale depending on either acreage or the amount of money realized. Okay. So we have also taken care of a farm, because when you have 5 acres, your objective could be subsistence, but by default you end up in the market because you have some surplus that can end in the market. And currently, with this support from government, we have a total of 63,000 Ugandan farmers
who have tapped into
agriculture.
And they're seeing the advantages. You're seeing the stories.
Yes, actually, and out of these 63, I think I was looking at the figures, close to 1 billion shillings has already been paid in claims.
Oh, great.
So there is value.
So this looks at everything from climate
yes,
change.
We look at weather, then we look at pests and diseases. Yes.
Two very key things to the farmers.
Sure.
Let's talk about, I know you talked about capital and how much insurance companies should, I think you explained to me, should start with, which is the starting capital, and then should maintain.
Yes.
Because ideally your business is, as insurance, you're paying out claims. So you need some money. And is it too much? Is a company is grappling with this? And also talk to us about licensing as well.
Yeah, currently we have an annual licensing regime where whoever wants to operate business in insurance has to be licensed.
So everyone who's operating insurance in this country,
yes, we know.
No one is.
I had somebody saying
someone said there's some people who are
there
operating
are some fake companies. Those companies are not in our knowledge, but we never take any information for granted.
Yes,
that is something that would be glad to follow up. But ideally, everybody who is operating a business in insurance must be licensed by the Insurance Regulatory Authority of Uganda. And there are some minimum licensing requirements. You talked of capital. For an insurer, a non-life insurance company, we need a minimum capital requirement of 4 billion Uganda shillings, which must be maintained at all time.
Okay.
Meaning that in addition to the 4 billion, you will need some working capital, you will need, you know, as you generate businesses to meet the other obligations such as claims payment. The 4 billion has to be maintained. And why are we emphasizing on this 4 billion? I mean, we want strong companies. We want to give the public confidence that if you buy your policy of, say, you have insured your car which is worth 100 million, you should not have any worry. If a company has minimum capital requirement of 4 billion, it means it has capacity.
You can be sorted, yes.
Exactly. For life, we look at 3 billion Uganda shillings, slightly lower.
Yes.
And this is also in view of the volumes of businesses, but also the risk exposure of the life companies. For brokerage firms, we need only 75 million shillings.
Okay.
Because these ones are brokers. They are not actually risk carriers. But because in the past, some of them have been sitting with some amount of clients and whatever, we said they also need some minimum. We don't need everybody to come and be a broker.
Yes.
We should attract brokers of some caliber.
Standard, yeah.
With the health membership organizations, we need 500 million as minimum capital. These ones are specialist medical insurance providers.
The ones that
and these are not part of the 29 that I talked about.
Yes, that is the people who come to us and give us medical insurance.
Exactly.
Let's just talk about that, because that's probably one of the biggest, I know we're running out of time, but the health insurance. And I was explaining to you off the break that I'm insured, I have a card,
yes. But
when I go, they're telling me, your card still has 400,000. Your bill today is 150. Do you want to take it off this, or do you want to pay cash? So are we not looking at what eventually is on the paper of what we're insured? But as you're telling me also that if I'm insured and the hospital I like going to, where my doctor is not part of it, I can actually ask for it to be added?
Yeah, you can ask your insurer, because this is your money. I mean, it's your policy. Unless the insurer has got specific reasons why they cannot include. Maybe
because the company has decided to put out X amount of money which will not fit into this bill, no?
Maybe I've not got.
Because if NTV pays my medical insurance, they're the ones who dictate how much they're putting into it.
Yes.
Which I may be privy to, I may not be privy to. And then the insurance company decides eventually how they can spread out.
Yeah, usually the insurance company will give you the list of their preferred providers.
Oh, yes.
But as a client, it is also your right to propose. That for me, for the last 7 years, this has been my provider of preference.
Yes.
So can you include them? And they were saying that unless the insurer has got very specific reasons why they cannot, which actually they should be able to explain to you,
me, yes.
Then they will include them. Because we are in an era of customer-centric kind of business, where customers now drive businesses. Any insurer, any business person who does not consider customer preferences cannot be in business.
You can't work. Sure. As we wind up, because we're pressed for time, I want to talk about the anti-fraud unit, just maybe fraud also in insurance, if we can just highlight that. Yeah,
Flavia and viewers, the insurers actually have been criticized for being very slow when it comes to claims. Now, they are justifiable to do that, because statistics show that there is a lot of fraud in the insurance industry. And the one we have managed to detect has been mainly in motor, and some of it in medical. Now, in motor, they forge accidents. I mean, they forge around theft. You insure, and more especially these high-value machines. You insure your car of 200 million. The following day, you steal it yourself. Then you
come back for...
Yes, you submit a claim. And indeed, insurers have suffered. And as a result of that, the premiums that you pay actually have been raised to take care of fraud, because these people are in business. KPMG made a study sometime last year, and they showed that 10% of the premiums that you pay is actually due to fraud. So without fraud, you could be paying 10% lower.
Wow.
Now, what IRA has done together with the Uganda Insurers Association and the other stakeholders, we have come up with an anti-fraud unit, which actually sits at IRA. And this fraud is composed of experts from Uganda Police Force and technical experts from the insurance industry. The idea is that if there is any suspicion of any claim, it is subjected to an investigation.
Okay, so not all the claims are going through that.
Not all of them.
The ones suspected
yes.
go through that.
There are claims which are obvious. It's actually a few that will be subjects of suspicion,
that
will be subject to investigation.
And it's already up
and we want to really send a message to the public that whoever is planning a fraud, I think time is up, because you'll be got.
So insurance is for our advantage. It's for our benefit to have, as you said, insurance is selling peace of mind.
Yeah.
That's what they're selling. So I guess you and I should also be careful to not make it a business. From the Insurance Regulatory Authority of Uganda, I had the Assistant Director, Market and Research, Protazio Sande. Thank you so much for the thoughts. I guess if I need information as well, as an average Ugandan, I can come to the Insurance Regulatory Authority.
We have a lot of information.
You can direct me to the right place to go to.
Yeah, our office is a public office. It's open through all the working hours. And actually, we have a complaints bureau. If you have any complaint with any insurance provider, we have a mini court of some sort.
That's key.
We give you a platform to air your views. We call the parties concerned and
deal with it.
We preside over the same. And we usually provide guidance. And this one has reduced also on the number of complaints and issues going to courts of law and whatever. Our office is located on Chadondo Road, Plot 5, Legacy Towers. There is a... You go Legacy Towers, Block B, because there are two blocks, there is A and B. So Block B on the second floor, you'll find Insurance Regulatory Authority of Uganda, and we shall be very glad to help you.
Fantastic. Thank you so much, Sande. The conversation has been about insurance in Uganda. You're watching Morning at NTV.